Welcome to Smart Stock Watch. Today is April 11th, 2025, and we're diving into the first quarter earnings report of BNY, a global financial services giant. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss BNY's latest financial performance.
Revenue and profitability overview. Let's start with the top line. BNY reported a total revenue of $4.8 billion for the first quarter of 2025, marking a 6% increase year over year. John, what are the key drivers behind this growth?
BNY's revenue growth is primarily driven by a 3% increase in fee revenue and an 11% rise in net interest income. The company has effectively leveraged its strategic platform's operating model to deliver integrated client solutions, which has contributed to this solid performance. Additionally, the pre-tax margin improved to 32%, reflecting significant positive operating leverage.
Earnings per share and analyst expectations. BNY reported an adjusted earnings per share of $1.58, surpassing the analyst forecast of $1.49. This is a 26% increase compared to the same quarter last year. John, how did BNY manage to exceed expectations?
BNY's ability to exceed EPS expectations can be attributed to its strong revenue growth and effective cost management. The company's focus on operational efficiencies and strategic investments has resulted in a robust financial performance, allowing it to deliver higher-than-expected earnings.
Operational efficiencies and future outlook. Despite a 2% increase in non-interest expenses, BNY has maintained a strong return on equity of 12.6% and a return on tangible common equity of 24.2%. John, what does this say about BNY's operational efficiency?
BNY's operational efficiency is evident in its ability to manage expenses while achieving significant revenue growth. The company's strategic investments and focus on efficiency savings have allowed it to maintain strong profitability metrics, positioning it well for future growth.
Capital and liquidity position. BNY has reported a Tier 1 leverage ratio of 6.2% and a CE1 ratio of 11.5%. The company also returned $1.1 billion to shareholders. How does BNY's capital and liquidity position support its strategic goals?
BNY's strong capital and liquidity position, highlighted by its robust leverage and CET1 ratios, provides a solid foundation for its strategic initiatives. The company's ability to return significant capital to shareholders while maintaining high liquidity ratios demonstrates its financial strength and commitment to shareholder value.
Key takeaways. In summary, BNY has delivered a strong performance in the first quarter of 2025, with impressive revenue growth, earnings per share exceeding expectations, and a solid capital position. John, any final thoughts on BNY's investment prospects?
BNY's strategic focus on operational efficiencies and integrated client solutions positions it well for future growth. Its strong financial metrics and capital management make it an attractive investment opportunity.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on BNY's performance in the comments below.